Hey, friends. Welcome to the Divorce Clarity Studio on WGSN-DB, Going Solo Network Radio, Podcasts, and TV. I'm your host, Lisa Lisser, CEO and founder of LZL Coaching, a boutique coaching firm focused on divorce, relationships, and life transitions. As a former lawyer, a Jewish educator, nonprofit leader, and divorced mom of 3 now grown kids, I can safely say my life has not followed a linear track. Post-divorce, I created a new framework for my identity that lifted up the strengths that were hiding during my marriage. My hope is that this podcast provides you with information that can help you find your own strengths as you navigate the turbulent waters of divorce. I share the mistakes many people make during divorce, including my own, and the wisdom of experts who work in the divorce support space. My goal is to raise up stories that let you feel seen, give you inspiration to move forward, and foster the courage to stand on your own 2 feet. Ultimately, the Divorce Clarity Studio is here to help you feel less alone, more informed, and more aligned with your values. Today's show is called What About the House? Getting the Inside Story. My guest is Stacey Ellison, a certified divorce lending professional and divorce mortgage planner. She has deep understanding of the divorce lending space, and it's not necessarily the same lending space as other contexts. Stacey has over 30 years of experience in the mortgage industry, and she brings a unique blend of technical knowledge and compassionate guidance to individuals navigating one of life's most challenging transitions. Welcome, Stacey.
Hi, Lisa. Thank you so much for having me.
It's so great to have you here. So, making decisions about the house can be incredibly hard. And there are so many emotions that are bundled up in the family home. And you have the insecurity of not knowing what's next if something has to be next. So, I'd love you to start by sharing your story. How did you get into this business and shift toward the divorcing community?
Yeah, so like you said, I've been in the mortgage industry for 30 some odd years, been through it all, crash and everything. And it was about around 2018, 2019, where I had several people come to me who were freshly divorced and said, I just got divorced. I need to refinance or I need to buy a new house. Here's my settlement agreement. Let's do this. And I ran into issues on every single one, different issues on every single one. And I am not a person that likes to say, no, I'm sorry, I can't help you. And I don't like not understanding why something doesn't work. So it sent me down a rabbit hole and I discovered divorce lending and the Divorce Lending Association that offered a certification in divorce lending. And I got my certification in 2020, right before the world shut down.
Wow.
And at that point, rates were very low. Everybody was refinancing, getting 2.5%, 3% on their mortgage. And there was not an opportunity to network. So I didn't really do anything with it until we came out of COVID. And because many people got divorced during COVID, there was a renewed need and urgency to help people figure this out. Because housing insecurity for divorcing couples is real. And if you wait and be like, oh, yeah, well, I'll figure it out after the divorce is finalized, it's often too late. Because the journey for someone who's been divorced is different from a first-time home buyer. It's different from any refinance or any other purchase because there's so many complications. So, so that's kind of how I came here and started working with divorcing homeowners and divorce coaches and divorce attorneys, family law attorneys, and mediators to help people figure out before the divorce is finalized how they're going to afford a mortgage or an equity buyout, and make sure that the language in the settlement agreement doesn't prevent mortgage financing after the fact,
Mhm.
because that was the issue that I ran into initially. For one reason or another, people wouldn't qualify for what they were looking to do.
Yeah. Yeah. So I'm so glad you raised that because so many people think that they'll just wait till after the divorce is final. They'll wait till after the MSA. Oh, I'll get the house, but then I'll be able to refinance, not knowing. And the lawyers don't really give the heads up, or at least they didn't back when I got divorced 10 plus years ago. And there I was with the house. There was a term that said I had to buy him out within a year. And I had no resources to do that. So what that term really meant was that I had to sell the house.
Yeah. And when someone goes through a divorce, and there are a lot of emotional reasons why they want to keep the house, stability for the children, knowing, not having to pack up and move, not having to change location, and all of that. It's a very emotional aspect of the divorce. So to be able to have certainty and peace of mind of knowing what you can afford and what you can't afford. Because typically, and this might have been your case, the attorney says, okay, who wants to keep the house? You say, I do. Okay. And then that's it. Everything else is hammered out. The support income, the visitation, everything else. And then it gets to the end of the divorce, everything is signed, and you go for financing. And if you can't get the financing, you're forced to sell the house. So that one thing that you held on to, you have to go through another whole round of loss. And it's just so much better to explore all of the options up front, and if necessary, shift gears and look forward. Like, okay, well, I can't afford to keep this house, but I can buy a cute little house and look forward to a new start and a clean slate there. So better to do that during the process than afterwards.
Yeah, there's so much that's bundled into what you just shared, because getting a real sense of your finances during the process before you sign on the dotted line is so very important. And I encourage all of my clients to hire a financial professional to help them understand what their finances will look like or could look like on day one of being divorced. And then it's really significant to reach out to a lending professional to understand what they need to do to qualify for a refinance or for selling the house and buying something new. Because in my case, all those years ago, I needed to have a certain number of months of consistent alimony in order to qualify for the mortgage. And frankly, at the beginning of our divorce, my ex-husband wasn't so thrilled about having to do it. So he was playing some monkey business with paying on time. I mean, he always wound up paying, but he made me sweat. And that was actually really challenging for purposes of getting a mortgage.
Yeah, and that's exactly right, Lisa. Underwriting guidelines require to show a history and consistency. So you have to have a 6-month history of alimony or child support, and there has to be a 3-year continuance. So, it's important that you don't get awarded 3 years of alimony, because by the time you have a 6-month history, you don't have 3 years continuance. Yeah. So that's where I get involved. And I also identify potential red flags in ownership and insurance and, escrow balances, and other things that just aren't on an attorney's radar when it comes to housing and financing. And by addressing these things up front and working them into the settlement agreement, it will allow successful financing afterwards. And then looking at all of the options, just because someone wants to keep the house doesn't mean that it's feasible long term or that it works into their overall financial strategy. So I work with the financial planners and I work with the numbers, and to make sure that they can not only keep the house, but maintain their standard of living. Right. Because
something close to it, right? Like maybe, people do make trade-offs. And if they value the staying in the house, they may be willing to give up yearly annual vacations, right? They need to decide what
Right.
they want and what they want more.
Exactly.
And so, because sometimes people can't afford to live at the same style that they've grown accustomed to, but that's where decisions need to be made. And speaking to a divorce lending professional early is going to help you think about what do you want and what do you want more.
Yeah. And explore all of the options, whether it's doing an equity buyout, assuming the current mortgage, buying something new, or if they're the exiting spouse, how do you, and they're still on the mortgage, how can you qualify for something, for a new purchase, with before the refinance or the sale of the home. So I've got strategies for all of those things, but if I need to consult with people in order to figure out what's best for them and give them all of the options.
Yeah, so that is a huge piece of planning for your marital settlement agreement, because it's about setting yourself up for a future that you can live into, not a future that's catching you behind the back and you're always running after what's next. So when do you think people should first reach out to you? Because it's really confusing during the divorce process to take steps, even small steps forward. So what do you recommend?
The earlier the better, even before you filed, right?
Wow. Okay.
Like I have some people that reach out to me like before they even have an attorney. And that's a big thing, is to, is this something that I can do? Can I keep the house? What would I qualify for? And I work with people from the minute they hire me until the divorce is finalized, right? It doesn't matter what stage it is, but the earlier the better. Because the reports that I provide and the strategies that I provide, and by working with the mediators or the family law attorneys, get worked into the settlement for everyone's protection.
Right, right. So what we're really talking about is being mindful of the future by taking steps in the present.
Absolutely.
Right.
Yep.
Right. And the problem that people face when they're dealing with the house, or one of the problems, is the emotional attachment. So how do you help ameliorate that loss when there is the emotional attachment?
I mean, just being compassionate. And the thing about what I do is that the numbers don't lie. Right. If someone tells me that they're comfortable with a $3,000 a month payment and keeping the house is going to give them a $5,000 a month payment, they've got to wrap their head around that. Right. I can say, okay, well, for $3,000, here's the amount of mortgage that you might qualify for. And, this is how much you might net from the proceeds of the house. So let's figure out what you could purchase and redirect those emotions to the anticipation of a new house and forming new memories. Because that the house doesn't hold the memories, your heart does.
Yeah.
And you take those with you.
Right. I mean, it's a thing. It's totally 100% true. But when people are going through the process, they think staying in the house is best for them, but they often say, I want the kids to be stable. And one of the things that can come up for people is that the house holds a lot of memories, and the house holds a lot of memories.
On both sides of the coin.
Right. Things broke down in that house, and there's a lot of bittersweet experiences that are part of that. I did have to sell my house within 6 months of getting divorced. And though it was hard, packing up 16 years of a life is hard. It was actually the best thing for me and my future and for my relationship with my ex, because he had emotional connections to the house, and it was hard for him to see me stay.
Mm,
And after I moved out, there was a lot lighter conversation. So
understand.
everything
Yeah.
wasn't so weighted, and people don't see that when they're coming from this side.
No, they can't see that. They
So
can't see that from the beginning, but it all works out in the end, right? And I'm a big believer in that it happens the way it should happen,
right,
right?
right,
And what I don't want to happen is someone who might qualify to keep the house, but it's not really in their best interest long term. I'd hate to see them keep the house and then a year later have to sell it, right? Because there's going to be a lot of money lost in that time frame.
yeah, yeah,
And it's I mean, I give people the options and I try to help them make the best decision they can, but ultimately it's up to them.
right, right,
And weighing the emotional versus the realistic, that's something that every person has to come to terms with one way or the other.
right.
um
So, so we will talk about that after the break. We're now about halfway through, so it's time to take a 30-second break for a word from our sponsor. And we will be back with our guest, Stacey Ellison. And we're back with certified divorce lending professional, Stacey Ellison. So we were talking about the house and what happens during the divorce process. So one of the things you started with was that when you got into this business, it happened because several people who had just gone through divorce approached you to help them purchase another property. And you said there were problems and different problems in each scenario. So can you give us a heads up on what could happen if you wait?
Sure. Well, the biggest thing is that not all income is qualified income.
Mm.
Just because you've got money coming in every month from multiple sources doesn't mean you can use all of those to qualify for a mortgage. So it's very important to there's going to be a disconnect sometimes between what you can afford and what you can qualify for.
Right.
So that's number one, because you want to make sure that the income that you need can be used to qualify you for the mortgage. And like we talked about earlier, that could be alimony or child support, maintenance. Those have rules and regulations around it. Somewhat, a second job, the marriage goes south. Someone's like, oh, I'm going to start delivering for Uber Eats. And if you don't have a 2-year history of working multiple jobs, you can't use that income to qualify. So
Wow.
that's the biggest thing, is like making sure that there's as small a discrepancy between cash flow and qualified income.
That's really interesting because people don't think about that, because they look at their cash flow, which is what's coming in,
Mhm.
and think, of course, I could use this to qualify for my loan. But what you're sharing is that don't be so sure. There are some streams of income that don't qualify.
Yeah. And sometimes maybe the solution is and we run into this a lot with the support income. If the support income is needed to qualify, you may have to wait 6 months until you have that history, right? And if that's the case, that timeline has to be built into the settlement agreement. They can't give you 60 days to refinance if you need to wait for a 6-month history of support income. So, and there's, if you're getting child support, if your kids are young, that's fine. You'll have a 3-year continuance. But if you have a 16-year-old, that's not qualified income because it's going to expire. And even though many people like, oh, but as long as they're in college, I'm still going to get the child support. Underwriting guidelines cut off at 18, regardless of that. So if you have a 16-year-old, child support is not going to be considered qualified income.
Yeah.
So that's the biggest issue that I find people struggle with, is understanding that difference between that not all income is qualified income. But there are a lot of other considerations that I identify for people when I look, like who's on the homeowner's insurance. If the exiting spouse is on the homeowner's insurance, then the retaining spouse better get on that insurance. Otherwise, the minute the divorce is finalized, there's no coverage. And that could be catastrophic.
Yeah.
Right. Things like that. Just making sure that the mortgage payment fits into an overall financial plan, long term. But I'd say the biggest area is the income.
Yeah. That's really important to understand before you sign the marital settlement agreement. It's really important. And the thing is, you would expect that your attorneys will flag it, but they don't always do it, because for some attorneys, it's just, let's just deal with the house, and then they divide it or hand it to one or the other. And that's the end of their story, because that's an asset they're distributing.
Yeah, and divorce attorneys are great with family law. They know all the legal ins and outs of everything, but they don't know mortgage guidelines.
Yeah.
And that's my piece of the puzzle, right? Especially within the context of divorce, because guidelines change, and it's a completely different process than when you bought your first house or when you did a previous refinance. It's a lot more complicated. And no one would go out, especially in this day and age, to buy a house without getting pre-approved.
Right.
This is kind of the similar thing. I mean, this is a much, much more involved than just a pre-approval, because I have clients I work with for months and months and months, while they go back and forth and negotiate. It is a lot more involved, but it's just as important, if not more important.
Yeah, because just because a house has a certain value doesn't mean that you can access that value when, if you're dividing assets, right? There's a lot to consider, like what kind of assets are you dividing, and how are you going to support yourself based on those assets?
And and another another big issue that I run into is determining the value of the home. And what happens if someone does go to refinance and the value comes in different than what they agreed on, either direction, higher or lower. So that's something that, there's certain language that needs to be put into the settlement agreement to protect people on both sides from that. It's like every there's so many things that can go wrong.
Right.
And it's got to be built in to protect it, to help get people where they want to go. Another thing is loan assumptions, right? That's been big in the last couple of years, especially since interest rates right now are so much higher than they were back in 2020 and 2021. And a lot of people have low interest rates. Typically, the only type of loans that were assumable were FHA and VA loans. But recently, many conventional lenders have recognized divorce as a life event and will allow a mortgage to be assumed, so you don't have to refinance. But not every lender does. And their guidelines, their debt to income ratio, and their requirements are going to be different for an assumption than it would be for a new loan. So
can you explain to the audience what an assumption of a loan is? Because not everyone knows all the terms.
Sure. So basically, there's an assumption would mean that if two people are joint on a mortgage, and you're getting divorced, and it would be a legal way to take over the mortgage and release the other party. Okay. It's not as simple as just calling your lender and saying, hey, I'm getting divorced. I need to take my ex-husband off the mortgage. They won't do that. It's a full qualification process. It's an application, it's underwriting, it's a credit pull. But it's each lender has their own guidelines in terms of qualification, what their required debt to income ratios are and all of that. And generally it's a lower ratio than if you were applying for a brand new loan. So it's a difficult process to go through, but it's something that a certified divorce lending professional can help with and figure it out and make sure it's something that you will qualify for, because you can't even start an assumption process until the divorce is finalized.
Right.
And if you're assuming a loan, you cannot access any equity. It's strictly your loan amount. So this would be for someone who would have the ability to access other funds or leverage it against other assets. And that's something that I help people figure out and help people structure while they're going through the process.
But these are all questions to consider before the settlement agreement, because you want language in the agreement that says, if X, Y, and Z are the scenario, then spouse A will do their best efforts to assume the loan. Yeah. And if not, then there might have to be another fallback, right?
Yeah. And assumptions can take longer, they can take up to a year to do, depending on the lender. So you can't say, oh, you're going to assume the loan in 30 days. That's not realistic. So these are the types of things that I advise, okay, if this is the way you want to go, then make sure that you give at least this amount of time, depending on the lender. And, here's what you need to call the lender and find out. And here are our next steps. And then, I help you complete the application and submit the review documentation before it's submitted to make sure that everything's going to go through the underwriting process smoothly.
Which is really important. You may have never done a house on your own, right? Your only experience may have been doing this joint mortgage with your spouse. And so now there are different qualifications. The other issues are tax related. When you assume the loan, or if you sell the house and you are the only one on the mortgage, there are different tax implications than if you were joint owners.
Yeah. And there are different tax implications when you go from being married to divorced. You go from filing jointly to being single or head of household. And there are different considerations as they relate to the mortgage in terms of tax, how you file your taxes. So it's a deeper conversation than just saying, well, here's your payment, here's your rate, here's your payment. Let's look at, if you let's talk to an accountant and see if you itemize your deductions, even though the rate's higher, how that there's an advantage there. There's a benefit there. It's not as bad as you might think it is, even though the rate's going up. So there's a lot of ways that I interact with other divorce professionals to help make sure that people understand the implications of what they're going to do.
So how can my audience find you or another divorce lending professional and integrate you into their divorce team?
Well, you can find me. My website is divorcemortgagesolutions.biz, and there's my phone number.
I say it out loud because we are
908-229-2705, or www.divorcemortgagesolutions.biz. I do offer a no-cost consultation to see if I can even help you out and explain what I can do and how I can help you. And we kind of go from there.
Okay. Do you sometimes work with both parties?
Yes.
So how does that work?
Well, often in mediation, or actually when there's attorneys involved too, because one person wants to keep the house, the other person wants to get their money out of the house. So I can do, and the departing spouse may be purchasing a new home. So there's going to be qualification considerations that they need to take into account. So I can work either as a financial neutral, working with both parties, or I can be an advocate working for one person. Based on your situation, that's the conversation we have, and figure out the best plan going forward for that.
So there's a lot of flexibility when it comes to incorporating a CDLP into your team. What would you like people to take away from today's show? What do you need them to know?
Divorce mortgage planning is very important. Not many people are aware of it, but it's very important because you can't negotiate on hypotheticals when it comes to your housing. You need facts, you need figures, you need to make an educated decision on the feasibility, the sustainability, the affordability, and it's super important and you need to have the conversation.
Yeah, you need to have the conversation. And what I want people to remember is that divorce has many facets, and where you're going to live, how you're going to live, what's going to be the best scenario for you and your future and your kids may not be what you expected. So this is where I encourage my clients to ask questions and find out who's the right professional at the right time. And it may be that you got to chunk up your professionals at the beginning, because that's going to set you up for success when you move forward. You can only walk into your future if you have information. And so often people are frozen with fear, paralyzed with fear, and they're too afraid to talk to the professionals that might be the ones that could help them. They're just going to wing it. And
no, that's not a strategy.
It's not a strategy, but it's about fear, because, the fight, flight, freeze, or fawn impulse that triggers when you're afraid and threatened, it can lead you to freeze. And what we are trying to offer is that opportunity to pause and ask the questions, have strategic curiosity. Who do I need to help me on this part of the journey? And Stacey, I want to thank you so much for being our guest. You really opened our eyes to different ways of handling what about the house.
Thank you. I thank you so much for having me. It's been a pleasure, and it's an important question. It's there's a lot of different options, and I just want people to be informed, make informed decisions when it comes to figuring out where they're going to live and how they're going to be able to afford it.
Yeah. And that's what it is. It's about making informed decisions. And you can only do that when you get the information that you need. So if you are stuck in a place where you have a question, don't let it sit there. Find the answer through the right person who has that knowledge. But you need to take stock of, why am I feeling uncertain here? What's going on? And then find a way to respond to the uncertainty. It's not that you'll be certain, but it's that you'll get some clarity. And clarity during divorce is going to lead you down a safer path. So with that, I thank you, Stacey Ellison. I thank you, my audience. This is Lisa Lisser of LZL Coaching. You can always find me at lzlcoaching.com. And I offer that complimentary 30-minute consult. Just go to the website and click book here. We will see you next time at the Divorce Clarity Studio.